Oh boy, here we go again. Back to work, man, oh man, what a move down this afternoon. Now, wait a second. We are bullish overall on the 60-minute time frame and a strong big move down this afternoon. You put those two clues together, and we've got two really easy trades to look for on FOMC Wednesday. The first of those two trades is the most common by far, but the second of those two trades is by far my favorite. We're going to cover both those trades tonight. I want to make sure you guys have a roadmap to make some money on FOMC Wednesday. Now, before we jump in and talk about those two trades, my favorite trades for Wednesday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these videos, if you enjoy these lessons, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section. Thank you so much for tuning in, supporting the channel. After the intro, though, let's go make some money on FOMC Wednesday. So let's start first tonight on the 60-minute time frame. The Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. There are two really important clues right now. They're telling us pretty much where the winners are going to be for tomorrow. Both of those clues are right here on the 60-minute. We are definitely still barely bullish right now on the S&P and Nasdaq on the 60-minute. I like to use this higher time frame to give us the best overall direction. That's one clue. The second clue is this huge move down we saw in the wake, of course, of the Amazon, the AMD earnings, and of course ahead of FOMC tomorrow. So put these two clues together. You have a bullish overall on the 60-minute and a big bearish move down. Those conflicting signals like that, again, they give us two very specific setups for the following day. The first one's the most common. The second one is my favorite. We'll talk about that as we go deeper into this video tonight because we don't trade off a 60-minute time frame, right? We're going to drill down to some faster tick charts in a second and talk entry tactics and both of those two trades on my radar for tomorrow. Before we do that, though, before we talk entries for tomorrow, let's grab our schedule because there's a lot going on tomorrow. As we kick off a brand new month of May, I have four things on my radar for tomorrow. First thing is the Treasury announcement at 8:30 Eastern Time. The second is the block of news, the ISM, the construction spending, and the JOLTS reports coming out at 10 o'clock Eastern Time. We have the FOMC announcement tomorrow afternoon at 2 p.m. Eastern Time. And the final thing, the fourth item for the list tomorrow is, unfortunately, there'll be no video newsletter tomorrow night. I hate to leave you guys hanging. I've got to be out of the office tomorrow afternoon after the closing bell, but don't you worry. I will be there tomorrow morning and every morning this week in our trade room at 8 o'clock Eastern Time. So four things on my radar. We'll kick it off with the Treasury announcement at 8:30 Eastern Time. Tough to tell how big of an impact the market will have on that, but we know that that ISM number and that JOLTS report, that ISM number specifically, is definitely on my radar. Anytime we have big red star news at 10 o'clock Eastern Time, you want to pay attention. And of course, everybody wants to hear from the FOMC tomorrow afternoon. We don't expect them to do anything with rates tomorrow, but we do expect them to address the fact that the ECI number came out hotter than expected this morning. So we're definitely watching and listening into J Powell tomorrow afternoon. One thing you want to remember on an FOMC day, they're a lot like Fridays. Get in early, remove risk early, leave a runner, but don't be gambling around that FOMC announcement in the afternoon tomorrow afternoon. Again, unfortunately, I will not be here tomorrow night on the video newsletter. We'll come back and resume on Thursday evening and get ready for Non-Farm Friday. And again, I'll be there tomorrow morning with you guys, of course, in our trade room. Back to our charts, though. Now you know those bullets of all the news events we're tracking for tomorrow. But we don't trade the news. We trade the charts, the patterns, the setups we see on the charts. I mentioned earlier, these 60-minute time frames pretty much tell us exactly what the best type of trades are going to be for tomorrow. Let's now drill down to some tick charts because we don't trade off time charts. We definitely don't trade off 60-minute time frames in our trade room. I like to trade off tick charts because tick charts make pattern recognition a hell of a lot easier. This is a 7,000 tick chart. You'll see they're linked up top there in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. It is pretty much the only indicator we use to find lots of winners every week in our trade room. I mentioned earlier before, right? We have this big move down. You can easily see that here now on the tick charts. And as I said before, there are two specific types of trades I look for. Let's start first tonight on the most common. What is most common after a big move down going against that 60-minute bias, that 60-minute time frame? We'll cover that one first, but you better watch all the way to the end tonight because the second of those two trades is my favorite by far. Hopefully we'll be lucky enough. We might get both of them tomorrow if we're lucky enough. Now, first things first, the most common scenario anytime we see a big move going against the overall directional bias is to get a two-legged pullback, a retest of that low, and a double bottom reversal. Now, we're going to unpack this, of course, because this is a very simple way of thinking about it. There are three ways to short that two-legged pullback, and there are two ways to buy that double bottom reversal. Now we know that anytime we see a big move like this, we don't expect sellers to want to sell low, right? They're going to want to sell high. And to do that, we look for what's called a two-legged pullback. Now, we're overall bullish in the 60-minute time frame. So once those bears get back to retest the low, I would love to find some bear traps, that double bottom reversal back up again. So let's talk about this more detail because, two-legged pullbacks are a very simple way of looking at it. When I think two-legged pullback, I want to get above the 21 moving average. I want to see two-legged pullback. Think about a measured move. Okay, measured moves, A, B, C, D. Two-legged pullbacks, they almost always go a little bit more than a measured move, all right? I don't have a crystal ball on this right now, so I don't know exactly how big that will be, but that's the structure of it I'm looking for. Now, I'm not going to blindly sell that two-legged pullback, right? We're not going to blindly trade anything, right? We always wait for a signal. Now, anytime we see a big move like this, we expect that two-legged pullback and a retest of that low, right? Because bears are pretty strong going lower. So what I'd like to do is trap some buyers in here who think this is a reversal. This is probably not a reversal. It's probably simply a deep pullback to allow sellers to sell nice and high. This is where you want to look for what we call a failure pattern in our free video classes and a failure pattern in our trade room. Let's trap some of these buyers in. Get these buyers, we assume these are rookie buyers, get them trapped in and use their stops to fuel this move going back down to retest that low. Now, once I get that failure triggered and we try to make our way back down to retest the low, watch closely. The entry you want here is going to be a bull trap. It's a lower low in price and a move right above that prior swing high. Think about this scenario for that two-legged pullback, a bit more than a measured move. We don't pick the top, right? We don't have crystal balls. They don't work very well. We wait for those buyers to come in, get trapped in. Why trap them in? Because then we can use our stops to fuel that move going lower. On the way down, what do? We don't sell low. We don't chase after it. We know where the market wants to go. It wants to go back and retest that low. We wait patiently for that, in this case, for that bull trap pattern. It's that lower low in price, and that move right above that high. Now, once we get back to that low, is this a good place to sell short? No, it's not, right? And also, too, we're overall bullish still on the 60-minute time frame, at least for now. We'll see how we look tomorrow night after the FOMC announcement comes out from JPOW. So a horrible spot to be a seller down there. And also, think about this, too. If I sell short on that two-legged pullback, where's my profit target? It's back to retest that low. So is it safe to assume that anybody who sold short up here on the two-legged pullback, they become buyers at that low? Yeah, that's the way you want to think about it. So now, as we go lower here now, I have a horrible spot to be selling, and I have anybody who sold short up there, they're taking their profit now at that low. Now, let's do it again. Trap those rookies in. Let those bears chase it lower once. and twice. The reason why I want twice is because I want to get stops. I want to juice those stops because stops are the fuel that we need to bounce the sucker back up again. Now, just like a failure into bull trap pattern, this will be a failure into a bear trap pattern. It's the same sequence. It's just we're looking for them on the opposite side there. I'm running out of space in this one, unfortunately. And the target on this, the target's easy. The target is to go back up and take out that big high. All right. So one of the most common scenarios we get after a big move down, again, in an overall bullish market on the 60-minute, get that two-legged pullback, a bit more than a measured move. Don't pick the top. Trap the buyers in. Use that failure pattern we teach so much in the free video classes. On the way down, hunt for those bull traps, lower low in price, that trap above that high. And then again, when everybody's taking their profit at that low, when the sellers up here become buyers down here, rope in the rookie traders, let them sell short a couple times and juice those stops, squeeze those stops for the failure into, again, this is a bear trap pattern. You need to learn bull traps and bear traps. It's essential to make money consistently in any market, higher high in price and a trap below that low. And again, the target is go back up to retest the high. Now, let's slow down for a second because I know most of you guys watching right now, especially my students, you guys know two-legged pullbacks. You know how we trade big moves, failures, trap patterns, double bottom, reversals. But if you're watching for the first time right now, this could be a brand new language for you. This might make no sense to you whatsoever, but that's all good though, because I teach this entire strategy. I teach all the setups. I have hundreds of examples of two-legged pullbacks, failures, trap patterns, all covered in a lot more detail in our free video classes. I'll put a link up top here for you. Don't you worry. Hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will show you a simple trick we use in our members trade room to know where the best winning trades are going to be each day. And then most importantly, I'll teach you 4 of my favorite entry patterns to help kickstart you making money. Guys, if you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Top Step or Apex, hit that link that popped up. Take that free course. Learn the roadmap we use every day in our trade room. It is perfect for someone trying to make the jump into full-time trading. Give you an easy roadmap so you always know where the winners are going to be every morning. Also, too, keep in mind, I'm going to put all the important links in the description of the video here tonight. I'll put the free class links. Definitely start there first. I'll put my trade room membership links in there as well. We trade together every day, 8 o'clock Eastern time with all the members. And also, too, I'm on Twitter all day long. I post a lot of updates on Twitter, or X, as you call it these days. The kids call it these days. If you're on X or if you're on Twitter, give me a follow. All the details in the description of the YouTube video. And most importantly, take that free course, right? You'll love the roadmap I lay out in that short video series. So now you know the basic fundamentals, right, of how we look to enter, right? Because again, two-legged pullbacks are simple ideas, but how we actually don't pick the top, how we trade it back down and buy the bounce right off of that low. Now, let's talk about a couple small variations of this, and then we'll go to the Nasdaq and we'll talk about that second core setup that, again, is my favorite here for tomorrow. Now, the first one is a double top. So now think about this. We have a very strong rundown. Anytime we see a strong rundown, we know to look for a two-legged pullback and a retest right, of that low. Now, we are in overall bull market right now, so we should not be surprised if we see something like this. If we get that two-legged pullback, this happens quite a bit actually. We may get that two-legged pullback. We may, right, that two-legged pullback may be a little bit more than we expect, right? A bit more than that measured move. And again, we're not going to pick the top on that, so it won't matter too much to us. But what happens oftentimes is we'll run up, we'll trap those buyers in, right? Once, twice, we'll get our winner on the way down. But for whatever reason, again, overall bullish in the 60-minute, strong pop back up. Sometimes we'll get that 1-to-1 first target, move that stop down to point of entry. It's a winning trade. But what happens is for some reason, there's too much strength on that move higher and they run right back up and retest that high. Now, this is not a reversal yet. To be a full-blown bullish reversal, they have to keep going through this. And unfortunately, that's a little too much to teach in the video tonight. We'll cover that tomorrow, don't you worry, in our trade room. But most of the time, though, when we have a strong run down like that, this double top is not, well, this retest is not a full-blown reversal. Remember earlier, we said earlier, it was that failure into, what was the pattern again? That bull trap pattern going lower is the exact same thing. So I want you to remind my students, our clients in our trade room, that in a situation like this, don't be too shocked if we get initial run up, we get the profit targets hitting the way down, we may not get all the way back to that low, and for whatever reason, right, they hold underbelly, they hold one of these lows right there, and they try to reverse it going higher. Oftentimes, this is more lucrative because now we got more rookies trapped in, right? Rookies will come in and think that now it's a reversal. It's not a reversal unless it keeps going, right? Got a goal, because that's a lot of momentum down, right, for the bears here right now. So that double top, right, that double top reversal, it's just like that double bottom reversal, right? It's a buyer failure. Again, 2 tries there. Use those stops to fuel. And then as we go lower, it's always going to be that bull trap pattern, that lower low in price, right above that high. And again, go back to that low and same thing, right? 1, 2, same sequence I mentioned a few moments ago. Keep that variation in mind. Don't assume that retest that high is a reversal. And then last but not least here, and then we'll go to the Nasdaq here in a moment, is that sometimes what happens is we get that 2-legged pullback. And and of course, you know me, right? I want to go up. I want to trap these buyers in and use their stops, right, to fuel that move back down. Well, sometimes there's so many bears up here, it gets where we want to go, but it gets whacked right back down again. When that happens, guys, watch for this pattern. If it gets whacked back down, in other words, we don't get the 1, 2 signal back down again. If it gets whacked back down again, it will oftentimes begin to grind as it goes lower. If there's one thing you learn from me, it needs to be this pattern right here. Anytime we see a V top like this, and again, we know the market wants to go back and retest that low, right? Now, I don't want to chase this thing going lower. One of the hardest parts about these V tops like this is that if you're anything like me, that little voice in your head is telling you, get in, right? Get in. You're missing it, right? You're missing it, right? That's that little voice in my head saying, come on, Joe. Come on, JJ. Get into this thing, man. You're missing it. So you don't want to chase after it, right? You do not listen to that voice in your head, right? Listen to your rules. And the rules tell us we don't want to sell low. I want to sell high. I'm going to draw a trend line off that low. I'm going to bring it up around that high. I'm going to look left, find a prior swing. We saw a beautiful example of this on the oil this morning. And of course, you've got that. I love bull traps. So I love those traps above those highs. In all reality, though, this could be any of the entry patterns. The 2 most common patterns would be definitely a bull trap pattern or a buyer failure pattern as it goes back down again. So not the most desirable trade, but again, right? We can't always get that picture perfect entry off the high we like it. If it V-tops off that high, all right, we know where the market wants to go. Get that trap, get that failure, don't chase it going lower, find that new channel, grab that first test off the high of that channel. And again, once we get back down to that low, anybody who sold short up here, where's their profit targets? Yeah, they're back at that low. Rope those rookies in, that failure pattern. And again, that bear trap pattern going higher. And this one now, oftentimes, these V bottoms, they get punched out pretty quickly back up to retest the high, right? A slight variation of that. But it always starts with that 2-legged pullback, right? A bit more than a measured move. All right, so now you know the most common sequence that happens after a big move down in an overall bull market. Now let's talk about the Nasdaq now. The Nasdaq's getting a bit lonely over here. I'm coming for you, buddy. I'm here for you, NQ. Now, the Nasdaq, same basic idea here, right? We've got a we have a bullish market. The bears were unable to hold. Buyers took control here going into this final few days of the month of April. We have a bullish market overall, at least for now. Who knows, right? 24 hours from now may not be that bullish any longer after Jay Powell speaks tomorrow afternoon. But for right now, though, bullish overall right now and a big move down. Do you see how those go against each other? Right, we're bullish overall, but a big move back down. Most of the time, a big move back down is not going to be a full-blown reversal. Let's now go to the tick charts here again, because I owe you guys and gals the second of those two patterns we look for tomorrow. Now, remember, on the Nasdaq right now, that's a big move down. We always look for that two-legged pullback, trap them in, back to retest the low, and because we're bullish overall, a double bottom reversal off of that low. The exact same game plan we talked about earlier on the S&P can be applied here to the Nasdaq. Now, the not as common, but my favorite by far. If you know me, you know what I love. I love range-bound markets. Ranges are not as common, but always a possibility, especially ahead of FOMC tomorrow afternoon. Sometimes we get these big moves and nobody dares to buy into them. None of the bears take profit and we start chopping around going sideways. Now, there are two things you want to understand about ranges. Ranges act like magnets and they love to rotate back and forth. They'll rotate up, down, and most of the time, the amount we go above is roughly equal to the amount we go below, right? So if we have a bearish market into a trading range and an overall bull market, we can play both sides of this range. We just have to make sure we understand how that rotation works, okay? So let's back this out a little bit, because what you want to do is, if we get, and I wish I had a more of a crystal ball here to tell you where the range will be tomorrow. I don't know where the range will be here. But if we do start going sideways on this, here's what you want to think about. First things first, we know that ranges are magnets. You want to find levels of resistance up overhead. Now, in the free video classes, we talk a lot about triangles, about overhead levels, right? Draw triangles off that high like that, right? The bottom line is find an area of resistance up overhead. It could be that big channel I drew coming down. It could be a prior swing. We'll do more of that tomorrow. But the most important thing is find levels of resistance above that range. Now remember, we don't want to sell low, right? After a big move down like this, we have to sell nice and high. And to get that, this is definitely where that two-legged pullback will definitely come in handy. Now, at that point, we can be a bit more aggressive on this entry because, again, that range is going to be acting as a magnet. We're not going to pick the top on this, right? We don't blindly sell into that area. We're going to look for that same pattern structure, right? That same 1, 2, and as we go lower, it's that bull trap on the way back down again. Now pay attention here now, because this is where range rotation is very, very important. So again, it's a bull trap. It's basically a bull trap up there, right? It's not technically a bull trap. The technical bull trap comes afterwards. And if you don't know the difference between a technical bull trap and a kind of theoretical bull trap, right? You'll learn more about that in the free video course, again, linked up there, upper right-hand corner, or all the links in the description of the video. So technically it's a buyer failure pattern. I call them failure patterns. Right, and of course, then a technical bull trap is right there. Now, what I always do in these situations is I like to go half of my position off at the low of that range, because it is going to be support. Then we measure the amount above the range. We project that down below the range. I apologize, this may not be exactly perfect here, but bear with me here on this, right? And that becomes our next target. Now, oftentimes, there'll be some trend line coming down like this, right? There'll be a trend line off these lows right there. I like to go and take a quarter off at any trend lines and leave that final quarter, right? Total 100% of the trade, right, off at that pendulum swing, right? Makes sense, okay? So you want to think about that rotation. Now, once we get down around that area, right? Once we get down into that area now think about that reversal going back up into that trading range. I'm out of space on this, so let me start back over again over here. Now, Range rotation, we go up, right? 1, 2, going lower. We get that bull trap pattern. Yes. We know that already. We complete that pendulum swing. Okay, now, is this a good place to be a seller? Of course not. We're selling low after a big move down. I want to sell high after a big move down. We mentioned that a moment ago. Now, is this a good place to be a buyer? I think it is. The problem is momentum, right? Momentum is very strong as it rotates off that high. So once again, we do not try to pick that bottom. My favorite trade off a low like this is we call it crown reversal. It's bears trying once, it's bears trying twice, and it's a bear trap underneath that low. When I have a rotation off the high like this, okay, and it rotates all the way off that high like that, this is a lot of momentum. I'm not going to use that standard failure pattern in this situation. What I'll do is use something similar, right? It'll be a bear trap pattern. I call these crown reversal patterns. 1 try, 2 try. And again, the idea is very simple. Run those stops and get that rotation going back higher. So it's basically nothing but bear traps if we end up rotating all the way, right, all the way off that high. And again, we know the market wants to go, so leave that runner. Crown reversal bear trap, a technical bear trap off of that low. And again, you'll learn more of that terminology inside the free video course. Now, one thing that you got to keep in mind is for tomorrow, one little curveball the market loves to throw at us is if we do this. Don't be surprised if we go sideways here and we end up running lower first and then up from there. All right. This one's a little more difficult. Same basic idea, right? Same basic idea. We're going to use that crown reversal. Bears once, bears twice, higher high in price, low below that low, right? Crown reversal. We're going to use that bear trap combination as we go higher, like always, right? Now, the key here now is think about now, where's the pendulum swing? Right? Pendulum's right there. And again, we use that for our targets on the long side. And then again, as it rolls higher here, we're not going to pick a top on that. Sometimes these turn into what we call slingshot reversals. Okay. Sometimes these rotations off the low like this, sometimes they keep on going. Sometimes they pop up into a grinder. And if they pop and grind like that, we draw it off the highs, bring it down off that low, and we buy that first test off of that low. It's the same idea of that kind of grinder we talked about a moment ago on the S&P. All right. So how do you know when a reversal happens? It'll break right on through that pendulum swing, and usually it'll keep on grinding. Right? When it grinds like that, bingo, draw that trend off the highs like that, find that low, bear trap, seller failure, pullback combo, the same entries you guys are learning inside the free video course. Now, also too, if we end up going up, right? It's 1, it's 2, buyer failure. As we go lower, it's that bull trap pattern, right? So keep an eye on that area, right? Keep an eye here on that area. This can be one of the most challenging parts about ranges. They're pretty easy, but you gotta be careful though with that fake out breakout. Fake out breakout, right? Bear trap down, squeezes back up. That's a lot of momentum as we go. Does it push through into that grinder going higher? Or what usually happens in these situations is because we have yet to pull back after that big run down, usually the buyers get trapped in here. The rookies think it's a reversal. It will feel like a reversal, but if you know how to use ranges and how to draw pendulum swings, you'll know better than to take that as a reversal and 1, 2, and make your money on the way back down into that trading range. Ranges act like magnets and they love to rotate. Bull traps off the high, bear traps off the low, trade that rotation back and forth, and that's the game plan. I can only hope we're going to get that set up for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, the best way to learn this stuff is to come out and trade it with me every morning at the opening bell. We open up at 8 o'clock Eastern time tomorrow morning. I'll put all the important links, the description, of the video. I would definitely recommend start with the free classes first. Get your feet wet with that. Get a good foundation. Start making money on your own. And hopefully sometime soon I'll see you trading with us in the morning room as a member. Any questions, concerns, issues getting started, you can always call the office. You can always use live chat. If you want help, need help, we'll be here to help out every step of the process. Fantastic week so far. We got a big day coming tomorrow. The game plan is set. Get a good night's sleep. Kick some butt tomorrow if we don't see you tomorrow morning in our trade room. And again, no video tomorrow night. Come back here on Thursday evening for the next edition of this video newsletter. In the meantime, be well, be nice to each other out there, will ya? And you better be here next time. Adios, amigos. Bye for now.